Now we're moving to our soft hurdle rate model. Still, everything in this table are the same except this performance fee base. So different from the hard hurdle rate model, this performance fee base is on the entire return above the hurdle. So we will change our formulas here like this. And we still do our testing on the right hand side because that is the criteria to determine if we should charge performance fee or not. Once this testing criteria met, our calculation will be different. Instead of just to charge anything above the hurdle rate, and we will have anything above the prior watermark. And of course, we will need to take away the performance fees we already paid. So in this case, if the profit is larger than the hurdle, we will use the current AUM minus the management fee. Essentially, it's just a gap, but I break out these details for just for reference. And then we will have this gap minus our high watermark and the performance fee in last period. So this is our base. I hope you understand the difference of the formula in this situation. And then during these years, we have all these years met the testing criteria, have a performance fee base. Come to our little blocks. We still have our testing row here to determine if it is eligible for performance fee. And then we will show what amount is ready to distribute based on the gap between profit and the management fee and the hurdle. And then let's check out the formula of the first year. So we do have management fee is 2% based on the AUM, and we have performance fee here. Performance fee will be the AUM minus the management fee. Essentially, it's a gap, which is this column. And then we will need to exclude the prior performance fee, which is 0 because this is the first year, and we will exclude the high watermark. So that is the performance fee in the first year. And then based on the $150,000 profit, we have 101,000 accumulated to now and roll to next year. And then the second year, based on our testing, the profit is not large enough to cover the hurdle. We'll have no performance fee in this situation. Then move to our third year. We do have a positive result from our testing, and this is eligible for performance fee. And then in this situation, our formula will first make sure this number is larger than 0, means it has enough money to cover the fees. Then we will do our math here. Our math here is the AUM minus the management fee, which is gap, and we're going to minus prior performance fee, and we're going to minus prior high watermark. So this is the base here. And based on the $170,000 profit, we will exclude our management fee, we'll exclude our performance fee. We still have 115,000 as part of the NAV and the road to next year. And then in year 4, we failed our testing. There's no performance fee. And then in year 5, we will have the calculation. And in this situation, make sure it's enough money to cover the fees. It's a positive here. It's larger than 0. So we will do our math. Our math is we have this AUM minus our management fee and minus prior performance fee and minus the prior high watermark. Then the base times 20%, 20% here. This is our performance fee. So this model is very similar layout as the hard hurdle rate model. By the end of the year 5, you can see this 1.50 to 109 NAV has these breakout. It's the NAV from prior years every year. And then we have this management fee. So these on the top of these cells, they are the management fee from every year. And then we have performance fees from each year in the 5-year period as well. So these little blocks, just a very clear picture about the breakout of the NAV. And let's go out to this template. So the template essentially is the same as our calculation model here. It's just to make it more cleaned. And on this chart, the ones I showed you earlier, I'm sure after walking through these models, now you understand how these numbers work with each other and why some of the years has performance fee and some of the years no performance fee. So in summary, no matter it's a hard hurdle or soft hurdle, we need to make sure the gap is large enough compared to the higher watermark from last year. And then we need to make sure there's enough profit to cover the hurdle. So if we say yes to both of them, we will charge the fee. If it's any of them, no, means no fee base, no performance fee for this time period. However, we can tell the part of the profit we did not charge will keep rolling as a NAV to the next time period. As the ending NAV growing up and down, we only charge performance fees when the ending NAV is higher than prior high watermark. Also, when the profit of this year is big enough to cover the management fee and the performance fee hurdle. I hope these two little charts help you have a visualized idea about high watermark and how this performance fee is calculated and related to other components like a hurdle, like a profit. Let's compare the result of the two high watermark models. In the hard hurdle model, this is the performance fee we have been charged. This is more GP favors. Every year, the performance fee in a soft hurdle model is higher than the hard hurdle model because the performance base is going back to the entire profit rather than just above the hurdle. So this is a very detailed and a clear picture about what the result look like.